Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, the stock market is still struggling, right? I mean, it's dropped 20% on the S&P. 20%, that's a big drop. That's almost bear market territory. 20% is what they say is a bear market, right? I don't think we're in a bear market yet. My take is we're actually going to bounce and possibly get to a new record high. I do believe you will get one more chance to exit the market before the big drop. Now, the other side of the coin, a lot of people think this is the big drop, right? We're down 20%. They think we're going to keep going down 40, 60, maybe as far as 80%. And that's a possibility. You got the bonds selling off. The HYG has broken down. The TLT is holding up, but it's starting to sell off. If those bonds get in free fall, we're in big trouble, right? Okay, but so a lot of people think this is already the big one. I think they're going to push us up one more time. I think they're going to do it by printing money and buying those bonds. You see, there's nobody else to buy the bonds, right? It's got to be the Federal Reserve has to jump in, start buying the bonds to put the liquidity into the market, which will get us the final jump up, right? Now, we've come down 20%, right? You go back to 2022 low, right? Okay, we went up 40%. And now we've come back 20% of that. We've given up half of the gain from the low of 2022. 2022, we had a run up 40%, given half of it back 20%. That's a Fibonacci retracement level. I do think we're going to get a bounce from here. Now, a lot of people think, no way, not possible. We got the tariffs, Mike. The tariffs. We're going to put 104% on China. 104%? Look at I think the tariffs are going to be short-lived, just my opinion. I don't think we're going to put 104% on China. I think that there'll be some negotiation between us and China to come up with a reasonable number. And I think that number will be a lot less than 104%. But we'll see how it plays out. A lot of people think I have this all wrong, right? They think that inflation is not coming back. Well, I do think inflation's coming back if for no other reason. The tariffs are going to add to inflationary pressures, right? But this gentleman in the comments, he's telling me that, well, oil's going to go below $40 a barrel and Trump's drill, baby, drill is going to keep it there. I got news for that guy. Look here's the funny part. If oil gets down below $40 a barrel, nobody's going to be drilling for oil because they can't bring it out of the ground at that price. So they will not be drill, baby, drill. Oil could get down to $40 temporarily on the news that there's going to be, well, a global depression, right? And that's why oil's dropping now. They think we're for surely going into a recession and maybe even hit a depression, and maybe oil can come down to $40. Heck, last time it went negative, right? But then what happened? Jumped back up to $100, $120 from negative $30. So oil can fluctuate a lot. But I actually think oil is going to be a year from now. I think it'll be higher than it is right now. I don't even know the exact number. Will we $60, $65? I don't know. But maybe we get down to that $40. But I think it will bounce up from there. Therefore, I think that will not stop inflation. Look, I agree that oil dropping helps inflation, right? If the gas prices come down, that helps inflation. So maybe the inflation numbers will be helped by the temporary, and I do say temporary drop in oil price. Now, this gentleman thinks it's going to be permanent, and he's entitled to his opinion. He had another opinion. This is why I'm not necessarily agreeing with his opinions. See, he thinks it's so smart that the Donald has China to pay off our debt, right? Because he's going to slap that 104% tariff on China, and China's going to be the one paying for that. I got news for him. It's actually the final consumer that's going to be bearing the brunt of that tariff. Maybe not the whole brunt of it, but most of the tariff is paid by the final consumer in that form of higher prices, which is very inflationary. And China that will not be bringing in enough money to pay off our debt. He thinks the debt's not a problem anymore. Well, why does it keep going up if it's not a problem? He thinks the tariffs are going to pay it off, and he thinks Trump is a genius genius to have China pay off our debt. Look at Trump is playing poker right now, right? And I got no problem with the game of poker. I got no problem with Trump playing poker. He thinks we have the best hand. Now, maybe we do, maybe we don't. I would tend to disagree that we do not have the best hand right now. Why? Because we can't make stuff here in America. Now, we have the potential to make stuff, but it's going to take us a couple of years to build the factories to make all the stuff that China's making for us, right? So China has all the products. They got all the goods. I think their hand might be a little bit better. And I think they have the trump card, no pun intended there, but I think they have the trump card of if they really wanted to hurt us, all they have to do is dump the bonds onto the marketplace. They own a lot of our bonds, right? They sell all of those at once. We have no one to buy them. No one to buy them except for, of course, the Federal Reserve. And we could watch their balance sheet go from 9 trillion to 15 trillion to 20 trillion to 30 trillion dollars. And we could watch hyperinflation come to our country. That's a possibility. That would be China's trump card, right? And that'd probably bring a hot war when that happens because things would get so bad, it would be a global depression. I hope it doesn't come to that. I hope cooler heads prevail. I hope we work out the trade deal. And when we work that trade deal out, it's going to shoot that stock market to new record highs. All right, I want to talk a little bit about the real estate market today because a lot of people, they just don't get it. They think their house is supposed to be, let's just say in my area, we'll use my area. Okay, a house that's $2.5 million, 1,200 square foot tract home. They think that that's the price that it's at. Well, it is at that price. You could maybe sell it at that price. A few buyers are still left, right? But the demand's really not there. The demand's falling off a cliff, right? Because of the affordability factor. This is not affordable up here at 2.5 million when it's supposed to be closer to $1 million, right? But that would be price discovery. We have no price discovery right now, so people can believe that their house is $2.5 million. And they say, but Mike, you got this whole housing market wrong. You've been wrong all these years, Saul, Mike. You don't know anything. I'm going to stop watching your channel. Please do. Watch everyone's channel, make your own opinion. My opinion is that, I know for a fact that houses have already dropped 50% in real money. In terms of real money, in terms of gold, your house has fallen by 50%. Now, people are upset with me because it hasn't done it in nominal terms yet. Is it going to do it in nominal terms? I would say it is. Now, I cannot control the government. The government can do whatever they want, right? And if they ever get out of the housing market, we will get price discovery and we'll find out that that $2.5 million tract home is not worth $2.5 million. It's only worth $1 million, and that'd be a drop of over 50%, right? That's called price discovery. But the government's in there. They don't want them to drop, right? They want to keep them propped up. They want to keep the prices high so they can collect the property taxes. They want to keep the prices high so people feel rich and they go out and they spend money. But here's what's going on, right? A lot of people, they bought their house back, let's call it, 5 years ago, 10 years ago, and they got locked in at 2.8% loan and they got this equity, right? But they can't tap the equity without selling the property. Now, here's why. Because they can't qualify for a loan. Even HELOC loans are getting rejected. Refi loans are being rejected at the highest rate ever. 40% rejection right now when people try to pull equity out of their house. They can't do it. They need the money because all other prices have gone up. Property taxes have doubled. Insurance has doubled and tripled in some areas. Some areas you can't get it. Maintenance costs have doubled. Price of food has gone up. They don't have money to even pay the mortgage at 2.8%. So what's happening? Well, in the United States, you don't need to pay your mortgage, right? Just stop paying if you want it. They can't do a thing to you. Now, why can't they do a thing to you? Well, you see, on Biden's last day in office, he signed an extension on all these moratoriums, on all this forbearance to 2026. Now, last I checked, we've been out of the pandemic for several years, but he extended it to 2026. There's been people living in their house not paying their mortgage for over 6 years now. Isn't that incredible? It's great if you're that person, right? Living rent-free, living mortgage-free. You can stay there because Joe Biden says you can. And so far, this administration hasn't corrected that. There's over 6 million people not paying their mortgage right now. 6 million, right? How much inventory is on the marketplace in the United States? We have about 900,000 in inventory and listings for sale, right? So we have 6 times as much inventory sitting there with people not paying their mortgage. Now, granted, out of those 6 million people, only about 1 million or 2 million are actually seriously delinquent where they'd already have the house come onto the marketplace. If it was the old times, we would have foreclosed and there'd be an additional 2 million homes for sale along with the 900,000. So it'd be about 3 million homes right now would be for sale. And then we get some price discovery. Oh, would we get that price discovery? You throw another 2 million homes on this market and you're going to see prices just drop like a rock. Now, will that happen? I don't know, right? Maybe they could sign it in the moratorium can go like into as forever, into perpetuity, right? They can just extend it. They can extend forbearance forever. But here's the thing. There's certain people that have to sell. Now, who are these people who that have to sell their properties? They're the home builders, right? Home builders have to sell. It's sitting vacant. If they don't sell that house, they're out of business because they can't go build another house because they need the money from that to put into the next one, right? Take their profits and put the rest of it in to building the next house. Home builders are having trouble getting their houses sold. Now, it's very fascinating to me that home builders are refusing to lower the price. They can't lower the price. Let's say there's a subdivision, 500 homes, and they got 300 homes sold, and they got 200 homes sitting vacant, right? They can't get them sold because the price is too high. So they can't lower the price because the 300 people that bought will be very, very pissed off at that home builder because they bought up here at 2 million. The home builder lowers it down to $1 million. Will they be upset? Yeah, they'll be upset, right? Because they just got hosed. They don't want to be the ones getting hosed. So what's the home builders been doing? Very fascinating, very fascinating. Okay, so what they've been doing is they've been giving concessions. Average home concession on a new build is 15%. So if you got $1 million new build home constructed, right, they're giving you $150,000 in incentives right now. So the price has really dropped already down to $850,000, but they can't say that. You got to pay $1 million and then they give you the incentives. Now, how do they give you the incentives? Well, they give you no money down, right? They'll pay your down payment. You don't need to put a penny down. They'll give you low interest rate, 2.5% the first year, 3.5% the second year, and then it goes up from there back to normal rates. They're going to be going up higher as the bond market starts to fall. Mortgage rates are going to be skyrocketing over 10%, I think we'll get to. But they're giving incentives in that way, right? So they're not lowering the price. So you're not seeing price discovery. You're not seeing what the prices really are. What else has happened? Well, the government, they own $3 trillion in loans, right? $3 trillion. Well, if they didn't buy those loans, you would see some price discovery. What if they decided to sell those loans? They're sitting on the Fed's balance sheet. You would see some price discovery in houses. You would see them drop 40, 50, 60%. They would start to plummet downward. It's just the way that it works. It's just what's happening, right? But right now, people they cannot pull the equity out of their house. They're starting to be forced selling, but we can't foreclose yet. Thanks to Mr. Biden. He's protected all these deadbeats, right? Well, he was kind of a I can't go there. But anyways, he's protecting these deadbeats because they haven't paid in 6 years. He's extended it out to 2026. Maybe we will wait till 2026 till we get an influx of 2 million, 4 million, 6 million homes being flooded onto the marketplace. Price discovery is going to come. You cannot prop up the market, a fake market, all these years. They've done it. And they could extend it, but we shall see. Now, in real terms, you see in the price already dropped 50%, right? Because gold doesn't lie. It's real money. It does not lie. Your house is already down 50%. Will it happen in nominal terms? If we get price discovery, yes, it's going to happen in nominal terms. 6 million people behind on their mortgages right now, not paying, don't have to pay till 2026. Kind of sad, kind of scary what could happen. Anyways, if you like this stuff, give me the thumbs up, get out there, punch the subscribe button, everybody. Have a great day. We'll talk again later in the week. Bye-bye now.